Hello, I am Burgess with Burgess and Co. We are CPAs with an emphasis on helping small businesses and individuals work through the complexities of the tax law. Thank you to FSEDI for sponsoring these short videos for the community as we try to keep up with all the changes in our life that we sometimes believe are overwhelming. Information can put you in overload, but the more information you have, the better the decision you will make. So thanks to FSEDI for providing these videos. For the sake of simplicity, I will refer to the three stimulus packages as the stimulus laws. I would like to start off with the Paycheck Protection Program loan. We are in the forgiveness stage. We are reading in our literature and hearing in our webinars that we attend, do not be in a hurry to file the loan forgiveness form. Why would you say to do that? First, there's a push by the banking industry, the tax profession industry, and other business industry groups to have businesses with a loan less than $150,000 not to have to submit any documentation other than the simple, truly simple, Form 3508EZ, which is a 3-page form submitted for forgiveness. This change would reduce the workload on the banking industry and the SBA, who are being overwhelmed with all the documentation and forms, and make it simple for a large number of businesses to obtain forgiveness. Second, there is support for change in an IRS ruling. The stimulus law says the loan, if forgiven, will be tax-free. IRS ruled that since the loan is not going to be counted in income, then the expenses that the PPP loan proceeds were used to pay cannot be deducted. So you do not report the loan as income, but then you have to reduce the expenses so the net effect is no tax benefit, which is contrary to the stimulus laws. It's kind of the way IRS keeps things in check. They make rulings on the law sometimes in opposition to the actual law itself. Hopefully the fourth stimulus law will correct that if we get one. The SBA under stimulus laws set up an EIDL loan. EIDL stands for Economic Injury Disaster Loan and is for businesses that have been affected by COVID-19. This is not a forgivable loan. The EIDL loan is a regular loan with a fixed interest rate of 3.75% and a term of up to 30 years with no prepayment penalties or fees, so you can prepay it early. Collateral is required, and the loan goes through regular underwriting procedures such as checking creditworthiness, ability to repay, and an adequate collateral. Application is made directly to SBA through an online portal. Do not apply through your bank. SBA website is sba.gov. I checked this morning and the portal is still open. Loan proceeds can be used for working capital and paying operating expenses. Don't get confused. There was an EIDL grant as a part of this loan process. That money has run out and is no longer available, but there is the EIDL loan. If a business suffers a loss called a net operating loss, under previous law, the business was required to carry that loss forward to the next year and each year thereafter until it is exhausted. Under the stimulus laws, the business can now carry a loss from 2018, 19, or 20 back 5 years. This can free up cash flow from the refunded taxes paid in the prior years, and you do not have to wait for filing your 2021 or 22 or 23 tax return to get the benefit of the loss that you have in this year. Previous law was supposed to allow qualified improvement property to be depreciated over 15 years, which makes it eligible for Section 179. Section 179 is a law that allows for the immediate write-off in the current year that you do the improvements to be written off in that 1 year. However, that particular language, when it came to the final bill, was omitted. They've been trying to correct it ever since. So what is qualified improvement property? Qualified improvement property is defined as any improvement made by a taxpayer to the interior of a portion of a non-residential building. So it has to be a commercial building or a rental building where you have purchased the building, started using it, and then you decide to make some improvements to the interior. That allows the improvements that you do to be depreciated over 15 years or in the year that you do the improvements, whichever you elect. There are some exclusions and some exceptions as usual, because nothing in tax law is simple. As this information was omitted from the original law, the stimulus laws correct that law to now allow taxpayers to have the correct depreciation on qualified improvement property retroactive back to 2018. So an amended return can be filed for those years and get a refund of taxes paid. Individuals are eligible for, and most eligible taxpayers have already received stimulus checks of either $1,200 for individuals or $2,400 for married couples, an additional $500 for kids. If you're eligible for the stimulus payments and have not received it for any reason, the stimulus payment will be added to your refund or reduce the balance due when you file your 2020 tax return next year. So you don't need to panic or get stressed out over the fact that you did not get it. If you qualify, you will get it on the tax return filed in 2021 for 2020. If you have a qualifying condition, there's been a change to retirement funds. What is a qualifying condition? A qualifying condition is if you, your spouse, or your dependent is diagnosed with COVID-19, or you experience adverse financial consequences, such as you were quarantined, you were furloughed, laid off, or have reduced hours, or unable to work because of a lack of child care, or if you close or reduce your hours of a business that you own or operate. If you have a qualifying condition, you can take a withdrawal from your IRA or 401k or other retirement plans of up to a total of $100,000 from all plans. Doesn't mean you can take 100 from each plan, but from all the plans combined, because some people have an IRA and a 401k. There are tax consequences to these withdrawals, but no penalty for early withdrawal. You can spread the tax consequences over 3 years, starting with the year of the withdrawal, by including in income 1/3 of the withdrawal in each of the 3 years. So if you withdraw the money, let's say you draw $60,000, you would report $20,000 in this year, $20,000 in the next year, and $20,000 in the third year. Or you can recontribute the withdrawal to your retirement plan within 3 years by paying the tax for the first 2 years and then filing an amended return in the year you contributed back to your retirement account. You would file an amended return to get the refunds of the taxes that you paid in the past. That is not as good of an option because you have to come up with tax money up front and then you get it back by filing an amended return, but it is an option. The stimulus laws allow for a waiver if you are 72 or over, and you generally must make a required minimum distribution. For 2020 only, you do not have to take this required minimum distribution in this year, and there will be no penalty. Finally, please speak with your tax advisor if you think any of these items would apply to you, or if you have questions about any other items that you hear in the news or on a bulletin. Tax law has gotten very complicated, and the answer always is, it depends. One fact can change an answer to most any question. So facts are really important. Pay attention to organizations like FSCDI, the Chamber, Downtown Franklin Association, the SBA, and other similar organizations that disseminate information for the changes that are occurring every single day. And my final piece of advice is to find a way to laugh, as laugh reduces stress. Have a good day. Thank you very much. Bye.